with a world record of $1.9 million in a single payout.
If you're starting out as a trader, the number one thing that I advise you to do is go get a job. The emotional attachment to money will make you do incredibly dumb things. If someone has money and just relatively successful in trading, they can scale a lot quicker because they can rationally make the same decisions with a larger amount of money, and the impact is way higher because you make more money.
Introducing Trader Kane. In this episode, we explore his strategies, his deep technical analysis style, and also walking through the psychology and emotions it takes to handle such large numbers as you approach millions of dollars in payouts. I'm also curious to know what was your cost to make the 100 and odd K that you did in Forex payouts?
Probably like 20K. Yeah.
What's your ratio like in your futures journey?
My Apex cost was $3,500
towards that 2 million payout.
2.25, yeah.
Yeah, that's insane.
Partial TPs are a coping mechanism for a bad trade and hoping it will play out. You have a 5R trade and I have a 3R trade. You trail out at 1, 2, 3, 4, 5R, you've got a 3R trade. If we size the same and I get out at 3R, I'm in the market less, I make more money, you make less, but you call more of the move, you're the better trader. Great.
The people from the US that are watching, they're thinking, well, I trade futures and I haven't had that fortune. Let's get into a bit of your strategy. Are you therefore predominantly counter trend trading?
Yeah, I trade retracements most of the time.
Why so? Ladies and gents, welcome back to another episode. Well, I'm joined by an interesting man today, and it goes with an honor. That is the #1 most paid out prop firm trader. Biggest payout in prop firm history. Incredible. Kane, thank you for joining.
Nah, thanks for having me, mate. Appreciate the invite.
So I want to take, obviously I've seen your episode on Riz and it was wonderful, and to kind of not do a repeat of that, I want to take a more technical deep dive approach and have a lot of fun with your strategy and exactly how you did it. Before we get into all of that good stuff, I want to understand a bit about you and your credentials and a bit about your trading journey.
Yeah, so appreciate you for watching the Riz interview, so thanks. Yeah, so I've been, coming up February now, it'll be just over 9 years in the markets. So decade, as some people would like to say, but we probably have to wait another year for that. But yeah, my journey goes Forex, crypto, Forex, but then to futures. So across that journey, I would say probably the last 4 to 5 years have been more actual trading, knowing what I'm talking about and knowing what I'm doing. The very early years were more getting scammed, signing up to these relevant, furu groups, whatever, trying to get into trading on the dream of getting a Lamborghini and, retiring my parents. Yeah. Typical, pretty much like how everyone gets into the industry. But my story is a bit different to the average trader. I made some money, I guess, with gambling Forex, pivoted to crypto at probably the best time ever, bull run of like 2017, 2016. Bought XRP at basically local lows, sold them at local highs, made good money, rode most of the alts to their pretty much tops of the market, even to today's standards. Some of those coins just don't even exist anymore. And then fast forward, a very short story in a long journey, over a couple of years, dodged every rug in crypto you could ever imagine, to then get rugged by FTX for crazy, just under 7 figures. So yeah, so it's a bit of a journey, and I've made a lot of money, lost a lot of money, made it all, lost it all, and then the more recent journey is that after the FTX scandal really pivoted to back to Forex, back to where the prop space was kind of booming at the time, the CFD prop space. So I saw this ability in the market to jump into the market, acquire a lot of capital, scale, recoup some of that money on the basis that it potentially wasn't coming back. That's a different story. And then more so recently, about 9 months ago, pivoted to futures, made some good money from some prop firms, some would say, and then about 3, 4, 5 months ago, apologies because I don't actually remember the exact date, acquired 20 Apex accounts. 72 days later, after passing them, $2 million. That's
incredible.
Yeah.
So when I first saw everyone saw your viral tweet about this payout, the first thing that probably everybody thought is he going to get paid out?
Yeah.
And it's interesting how you're using your social media to keep the prop firms accountable, because then there was a full documentation of every trade you took. But even before just the doubts of the payouts and so forth, what I've come to realize, this wasn't even your first payout or your first big payout. And I don't know why, I just had the assumption that there's some guy out there that just hit a home run, he smashed, he made $2 million, and he's set for life. But I don't think the story's quite that. You already had a high paying job and you already had money coming in from the crypto days and so forth. Do you think that kind of not being dead broke and not having, no income coming in, and that's how usually traders start. But in fact, you had a bit of money coming in, helped in any sense to be able to grow and scale accounts.
Oh, 100%. Yeah. I said this recently at a conference. I said, if you're starting out as a trader, the number one thing that I advise you to do is go get a job.
Yeah.
Yeah.
Why is that?
Because it's the emotional attachment to money will make you do incredibly dumb things, even if you're emotionally attached to it as a millionaire. If you're emotionally attached to your money as a millionaire and you're like, oh, I'm going to go and buy a $2 million car, you're emotionally attached to it. It's probably a dumb decision at that point, right? And the same thing goes for trading. So yeah, I completely attribute the fact that, I had a legacy job where I worked 10 years in tech sales. I built myself up to, a relatively decent job by anyone's standard as a 30-year-old. I was making insane money.
Because it was commission based.
It was tech sales and it was commission based. So I was getting paid on what I put in, and I was always incentivized to do more. So my ability to earn was just always there. And then combined with the fact that I'd been doing it 10 years, I had a bunch of contacts I could just pick up the phone to and say, hey, I want to do business with you. Obviously, it's not as simple as this, but, wine and dine, socialize, and get these deals in, and then pass them across the business to help close, et cetera, et cetera. So I had that. I'd also made a bunch of money through crypto, made some money through props, which, to be honest, at that time was like kind of my first stab at the whole prop thing. Didn't really get it to start with about how it would work. Quickly realized how it works. Made a bunch of money from CFD props. Again, kind of dodged the implosion of most of them. And then just had this 2-month period where I think I almost convinced myself I just lost my edge in a Forex perspective. And then met my business partner who was trading futures at the time, kind of went to futures, started watching a lot more of his content, his live streams, and was just like, there's something about this that just makes way more sense to me. This asset's made to go up. I can almost approach the chart every day with a bullish bias because it's an ETF. If it goes down indefinitely, hey, we've got a bigger
problem. The world is the issue then.
We've got a bigger issue, right? So where, Euro USD ranging for 2 years is normal, and it's just absolutely mental torture at that point. So instead of grabbing like these small intraday moves on Euro USD, I could just pivot, slightly alter my strategy, and look for more intraday based trades where I don't need to grab the entire move on Euro USD. I can just grab a very small piece of the entire pie on the NASDAQ and go there. But it gets back to your original question. Having money keeps you unemotionally attached to the money, and there is a direct correlation between that. If someone has money and they have a high-paying job or a part-time job or are just relatively successful in trading, they can scale a lot quicker because they can just rationally make the same decisions with a larger amount of money, and the impact is way higher because you make more money.
I think the inclination for traders is as soon as they've made even a 10K payout, they're already thinking about dropping out of uni or leaving their job. What was your transition away from your, I guess it was a high paying thing, so that maybe counters it, let's say, but what was your exit plan from your job?
It was multiple things. One of them was more that my parents are getting older. My mum was actually quite ill at the time, or we had a health scare at the time. So it was just like, hey, this job just isn't worth it. I'd been doing it for long enough. I'd already had an exit plan to get out when certain plans came to fruition. And at that point, I'd got a bunch of money in the bank. I'd got my house. I'd got a car. The money that I was making every month wasn't actually being used for anything other than just paying my bills. And my bills are relatively small. I live on my own. Fine, I have a nice sized house. But like at the time, I didn't travel that much. At the time, I didn't have like this extravagant lifestyle of flying around the world, doing all these crazy things. So I was just like, I can just stop working, spend more time with my loved ones. And I spoke about this before. The year of losing all the money, my brother had a motorbike crash and broke the entire left-hand side of his body. So like his life has changed forever now. He has one leg shorter than the other. He's constantly in pain. He struggles to not find work, but like the work he does find is not the best. So like I'm just always trying to spend time with him and help his life, and try and help him potentially trade or do something on the side that could potentially grow into a business. My sister, her husband unfortunately died. He passed away. He was diagnosed with terminal cancer about 3 months after the FTX drama, and about 12 months after that, he unfortunately passed away. She has 3 young children. So it's just nice just to spend time with those children and give those, like, I'm not trying to be their father obviously, but just like a male figure in their life. And especially my young nephew, he's 4. I just spend every time I can get some time with him, I just spend time with him, because I just think it's really sad. Like, he's gonna grow up without a dad, gonna grow up without a male figure. Find my sister may or may not find another partner, you know, she will, but and at that point I'm just like, hey, just way more stuff matters to me than a job. I'm making good money over here, and I can just keep making the good money and look to scale that. And at that point, it was before the Apex stuff. I can look to scale that, grow my personal account, grow my longer term investments, and I can just do the things that matter, spending time with my family.
So out of the dozens and dozens of prop firms that exist in the whole space, who can we really trust? Whether they use slippage, whether they use types of drawdown, unrealistic trading conditions, every single prop firm has hidden tricks. So after thorough research and speaking to a lot of traders, Alpha Capital is definitely the best prop firm in the space. So apart from their no commissions, low spread, no slippage, great reputation, never denying a payout, because you are a Titans of Tomorrow viewer, you get a special discount on every evaluation just using the link or using the code TOT for Titans of Tomorrow.
With regards to like many things pulling you out of your job, where it's people to take care of, and maybe the perspective of the situation of your brother and brother-in-law, all of these things are like, okay, life's too short and X, Y, Z. But at the same time, you also had to prepare yourself adequately to just not recklessly leave because there's situations at home. What was those parameters you put in place to say, okay, I can sensibly walk away from a job now?
Oh, I had 2-3 years of like
run rate.
Run rate.
Okay.
So that if I never worked, like, let's cut all of the money that I've made over the last 12 months out of the question, right? If at that point I had 3 years, if I never worked a day in the next 3 years and I just lived the same life, I was good. Okay. So like, and at that point, I think for me, 2 to 3 years was always like the area. The more runway I had, the better. Because
but the minimum you'd say is like 2 years run rate.
Yeah. Because listen, I've lived long enough now. I'm 30, right? And I guess, you know, fine, I've got loads more years, but I've lived long enough to know that life can kick you in the balls at the worst time, right? And I say that like wholeheartedly. Life can get tough, and then just when you think it can't get worse, someone comes along with an almighty sledgehammer and just takes you out the knees. So you can plan for 12, but you plan for 12 and you're giving yourself 12 months to make it right. A year is not a long time. Like, I can only remember Christmas the other day, and we're approaching it heavily, pretty quick, right? So 2 years for me was like enough run rate and enough room for it to just go wrong.
Fair enough. I think that's also interesting perspective, because people are like 1-2 payouts or 3 months run rate are already thinking to change their whole life.
Suicide.
Yeah, it's interesting.
Yeah.
Now, is what I also want to, before we take a deep dive into technicals, and now with the bull run that we're in, maybe towards the end of the episode, we'll talk about your crypto views and how to capitalize on that, because that's where your initial financial base was from. I want to start off with the Forex to futures, or CFD Forex to futures, where when I went to the US on tour with the show, everyone over there is doing futures or options or stocks, and no one really was doing FX. But in the UK, at least, everyone's raised on FX. And at least from my side, I can say I'm pretty ignorant. And now speaking to other traders, I have come to realize maybe the power of it. But I also want to hear from you as someone that actually did the transition. What was that experience like? Because, for example, for me, it's the case of it might be great, it might even be better, but I don't want to mess with something that's working nicely for me and maybe not even have an edge over there, or these kind of thoughts of, is it worth transitioning over? What is your thoughts on your journey from FX to futures, and how did you transition?
Yeah, so the transition started because I had like a October to December like 10 loss streak on Euro USD, and that was like unheard of for me. Like, I just never lost 10 trades in a row, so really knocked me confidence wise. Really like went into like self-sabotage mode, like trying to find every reason. Went back to paper, went back to demo, but I quite literally couldn't buy a win. Like, I'd be like, my setup's here, I've been failing so much, let me just counter trade myself. Boom, setup plays out. Like, my normal setup would play out. Okay, great, we're back. Great, now let me trade my normal setup. Boom. And it was just like, at the moment I got into trades, the volatility just kicked in on Euro, and I was just like, the market's out to get me, like blah. I just found every excuse just to accept that, like, it's a low volatility period, it's low probability, I just shouldn't be trading as much. And I was just like, coming to that period of the end of the year where I just wanted to finish strong, and it just ruined my mental. So at the time I was just in a susceptible place to just change. Either changing my model, because at that point I'd convinced myself that it was unprofitable, changing the going to options, going to futures, like exploring all of these things. Options is still very foreign to me, even now. I have a good relationship with T-Trades. He trades options, completely foreign. He's tried to teach me several times. It just doesn't make sense, so I get it. But futures is like, I guess the most similar to Forex, right? So this is how I always describe it. You've got three categories: stock, CFDs, and futures, and then you've got options over here that we just forget about. So stock is you just buy the stock, you hold it, you carry the difference in price. If it goes up, you sell it, you carry the difference, and that's just like you buy, you hold, it goes up forever, whatever. Future CFDs is like no obligation to purchase anything. You're trading via a broker. That broker is either A booking you or B booking you. It's out of your control, but the CFD side of it is just you're basically trading a contract for difference. So that what you're saying is, I want to sell Euro USD here and I want to buy it here and I want the difference, right? That's the whole premise of the CFDs, combined with a few slippage either side, because the broker has to cover their ass when they obviously either A book you or B book you or try and wick you out of a trade, whatever. And then the future side of it is like a combination of those two. Right, so you've got your stocks, so you're trading stocks like the Nasdaq, but you've got your contract for difference in terms of you can basically bet on price going up. So you go long, you're betting on it going up. You go short, you're betting on it going down. But there is a obligation to purchase the stock if you hold the futures contract for long enough. Most people don't. Okay. So everyone trading props, you're never going to have that problem because it's in sim. But on a live account, say I long one Nasdaq today, just like I pick up my phone, long one Nasdaq, and I hold it till the end of December. I have the obligation to purchase one Nasdaq stock.
Oh, okay.
Right, so if I hold it to expiration, I have the obligation to purchase it. So it's almost like the obligation from an option. It pulls in some of that option stuff of the obligation to purchase or obligation to sell, which can play out. But I never hold it that long. I'm in and out of my trades on an intraday basis. So, but the attractive thing to me about futures was it's all regulated by CME. So it's all regulated by them. All the data comes from them. So everyone's trading the same data. Where if you use a Forex broker and I use a different one, and we have the same stop loss and same entry, I could get wicked out and you could run to TP and it could be the same. Does that mean that one of us fucked up? No, we had the same trade, but our broker or our broker just had a different slippage, and that caused us to get wicked out of it, which I hated. I just could not get my head around that. So futures was really attractive to me for a number of reasons. It's made to go up, so I could always go into the chart with a bullish bias, which is tough for me because I'm very short biased a lot of the time.
Me too, man. I don't know why, but 80% of my trades end up sells.
Same, even now, truthfully.
In a bullish asset.
Yeah. I trade retracements on a bullish asset, which is it's suicide sometimes. But so I go in with a bullish bias. So when price really pulls back like 10%, you know that stuff's just going to pull back eventually. So you can just really scale into longs. 2, because it's all centralized and then you're just trading via a broker that's giving you the data feed from CME, everyone's trading the same, candles all print the same. And if me and you have the same stop loss and I get stopped out, you 100% got stopped out. Especially in the sim. Live, maybe not if the wick is the complete, but if let's say my stop loss is 18k and when it went to 17999.75 and yours is 18k, we both got stopped out because orders got filled at 0.75, which means both of our sell orders got stopped. So, and that for me was the most attractive thing because I could just be super tight on my invalidations, which I'm not super tight on, but I could just make sure that I don't want this wick broken. If that wick breaks for whatever reason, whether it's a rate or not, I don't want to be in that trade. Because then I get another opportunity to get in. So that was the most attractive thing to me. Was I worried about my edge not playing out? Yes, but I had like a month period where I was trying to figure out whether my edge would play out. I made a few adjustments, trying to keep myself out of the bad trades. And quickly I was just like, winner, okay. Loss, winner. And I was like, let's just stop back testing and start forward testing. Would you have
said that was like a beginner's luck, or it was this because in the Forex side when you had a 10 loss streak, we could also say that's a bad period, and then you go into futures and it was maybe a good period, and maybe it wasn't the asset itself, or you could say no, it was a right transition to do.
Right transition to do, 100%. Timing of it probably was a bit bad, like a new year, January, like because then I'm just trading like the yearly PO3, like, and it's just like I'm like framing everything from a yearly perspective in January, like based on the previous close. But then I just remembered like, okay, this could just go up. And when I really like honed in on it, I just stopped caring about everything else that was happening 6 months away. And all I cared about was grabbing my piece of the pie today. I don't need to grab the whole move every day. I just need a very small piece of a move, and I'm paid and I'm good and I'm done. And I just don't care what happens to the rest of the day.
With regards to your payouts that you may have had in FX compared to the payouts you've had in futures, is there also a significant difference there to say, okay, I should stick out futures?
Yeah, the futures side of things from a prop perspective, the scaling in futures is just obviously there. You can have 20 accounts with Apex. You can have 5 with Top Step. You can have multiple accounts with multiple people. Typically, once you get like 1 to 2 CFD accounts, they're like no more accounts. Yep. You know, so the earning potential in futures is more, and obviously that just is represented by my like 100 and something K in CFDs to my close to 3 million now in futures.
And although that's a crazy stat in itself, not only of the dollar amount, but also the disparity between your FX and futures profit rate. I'm also curious to know what was your cost, let's say, to make the 100 and odd K that you did in Forex payouts. How much did you spend in evaluations and blown accounts?
Probably like 20K, yeah.
Okay, so let's say 1 to 5.
Yeah.
1 to 5 in terms of your cost of challenge fees towards your payouts.
Yeah.
What's your ratio like in your futures journey?
Like minimal. My Apex cost was $3,500
towards that 2 million payout.
2.25, yeah.
Yeah, that's insane.
That's like 1,000 difference, right? What? Yeah, I'm pretty bad at maths, but
me too. I don't even know maths. It's a big number.
All I know is a big number. Yeah,
that's pretty incredible. And do you think that was attributed to, because I mean the people from the US that are watching, they're thinking, well, I trade futures and I haven't had that fortune, or I haven't made it work out like that. So I don't want to say it's you transitioning from FX to futures. It's probably a lot deeper. So first of all, I want to understand. You said you're predominantly a seller. Let's get into a bit of your strategy. Are you therefore predominantly counter trend trading?
Yeah, I trade retracements most of the time. Yeah,
by design.
Yep.
Why so?
I actually want to trade retracements from a bullish perspective, right? So I want to be long on the Nasdaq, but the truth is that because the asset goes up so much, I can't be long at the top of the market, and that's just my mental and my whole strategy is to trade retracements in an overarching uptrend, right? So whether that is I'm trading the retracement down or I'm trading the expansion up, I don't care either one of those. I would rather the expansion because the piece of the pie is way bigger. But truthfully, even then, once the P&L starts to hit a certain amount, I'm out because it's good. Like at that point, I see the number and I'm like, I'd be really annoyed if that number started to round trip by X amount. Let me trade on my stop. Great. If it runs, it runs. If not, and then after a while, I'm like in a trade for too long, close.
So therefore, you kind of taking profits based on predefined plan, like as you're getting into the trade, these are my exit points, or this is where I want to get out.
Yeah.
Or is it based on a feeling of, okay, this dollar amount is something I'm happy with?
They're both.
Okay, interesting.
Typically, when NQ runs in either direction, it runs. Like there's no holding about. It just goes, right? So, and I always like to enter on an up or a down tick. Like as in, I want to buy on a down tick and I want to sell on an uptick. I don't want to be like closing as price is retracing on a long, because in my head I'm just cheating myself out. And also price will always seek to liquidity in my head. I know that's just what I believe. And if I can exit and price then runs 5 times the amount, I don't care. Like, because 1, I should be sized correctly for the trade. 2, if my risk to reward on that trade is good, and to say my risk to reward is anywhere from 1.5 to 2.5.
Okay, interesting.
I don't go for 5-10 hour trades or whatever like that. That doesn't interest me. Like, fine, sometimes it just plays out that way. Like when price is so volatile, it's like, okay, this is my validation and this is where I think we trade. It's 5 hour, great. But it's very rare. So I'm a low risk to reward, i.e. 1.5 to 2.5. My sweet spot is typically around 1.75 to 2. And I'm just trading that small piece of the pie. If based on my stop loss and my entry and the high of the day, that's 50R, does that impact me? No, because truthfully, I'm sized correctly. I made enough money today for the average person's monthly salary. I'm good.
With you being saying that, you know, it can run and you can have a lot of movement in a single session, do you therefore maybe leave a runner, or do you take partials and allow the rest, or just to satiate this feeling of I could have made a lot more, therefore partialing in the system, or is it only full take profits?
Full take profits. I kind of baited everyone on Twitter about this the other day around partial TPs are a coping mechanism for a bad trade and hoping it will play out. That's basically what I said, because if let's just like hypothesize, right? You have a 5R trade and I have a 3R trade. You trail out at 1, 2, 3, 4, 5R. You've got a 3R trade. You're just hoping that you get to 5R, and it feels better to be in the market for longer. If we size the same and I get out at 3R, the chances that I make more money are higher. Mm-hmm. So like I'm in the market less. Time-wise, I'm in the market less. We're sized the same. I make more money, you make less, but you caught more of the move. You're the better trader. Great in theory, but in theory that's great. So like, if I can just size correctly and I just get in and out of the market at predetermined points, I don't care if you catch a 20R trade and scale out 15 times. I caught a 3R trade and just got out once, and fine. Okay, that one runner that you held to like 50R probably is like, it makes up for all of it or whatever, but they play out like once a year.
Exactly, and I think if people have an issue of optimizing for the anomaly or optimizing for the absolute winner, when that maybe is a rarer occurrence in your trading system. So you got to optimize for what happens more often, which completely makes sense to me. I'm going to ask you some questions on this from kind of my reflections on that topic. But before I do, what kind of comments did you see in the Twitter thread of why were people defending partials?
Because they're emotionally attached to it. That's my opinion, at least. The main comments were like, have like predetermined like partials that like internal and external liquidity. Okay, but if you think price isn't going to trade to external, trail your stop. This is my opinion. Trail your stop, right? And if price comes back to your stop loss, you're wrong. You still made money. You paid the trader. Good. Everyone's happy. If not, you made more money trading to external than if you were to TP to internal to external. Or better yet, just TP internal. And like everyone always, again, on the comments would say, it's better to partial and get another entry. Okay, well, it's better by that logic. It's better to just close your trade and get another trade.
Entry, yeah.
Like by the same logic, it's like there's so many like, and it's purely emotion from them because statistically partials are just worse. You can back test it. You can go and back test. I can give you a strategy. You back test partials by a predetermined amount, or you back test full TPs. Full TPs will always win if the model is profitable. Facts. That's just how it works. So.
When it comes to this profit-taking system discussion, I've had a long journey with it myself where majority of my trading career, I was doing it like most, which is on levels. Let's say a new lower low, let's say Asia low liquidity, let's say M15 structure. But then you realize you have so many levels on your chart, internal, external. Then you're like, I have 1 hour structure, M15 structure, M5 structure, 4 hour structure. Like all of these are valid. Like how the hell do I pick one? And then usually what happens is you pick on your emotions. So it's like whatever I want to make, or you just kind of fear and greed are kind of both ends of the spectrum. So you either take it too early, too late, and you can kind of cope your way to saying it was predefined. But when you have 10 valid levels and you pick one of them, there's no art to that. There's no science to that. You're just at that point picking. So then I transitioned towards fixed levels, and my journey there was I don't want to optimize for my best trade because that's a rare occurrence. So let's say I could have taken a partial at 1 to 20, 1 to 30, something crazy like that, but it happens once every 6 months. There's no point in that. So what I started to do was transition towards 1 to 10, 1 to 3. And I'm trading a smaller stop loss, so that can be done in intraday perspective. The reason I did that was partials, is because I knew that the 1 to 10 wasn't my regular occurrence, but I also wanted to see those trades that went in my direction, but then reversed on me. And some of those would reverse at a 1 to 1 and then reverse, or 1 to 10 and then reverse. And there was a lot in the middle. So I realized it was a bell curve. So I slammed my 1 to 3, which was at the peak of that bell curve, to say, okay, this is the optimal place for me to take a partial, and then full volume at 1 to 10. I did that for a while, and it was working okay, or working well, I want to say, because I improved my overall profit without having to change anything in my edge. But then what I also realized this year specifically is a lot of my trades were doing the 1 to 3. and maybe 20% of them were doing the 1 to 10, meaning to say I was front loaded, where most of my trades were hitting that 1 to 3 zone. So I started thinking, what if I did take full volume at the 1 to 3 and maybe no points at the 1 to 10? So I'm testing that right now. But the question I want to bring to this pointers of partials versus full volume is, the reason I aligned a 1 to 3, 1 to 10 was around my data. But now if I'm to look to justify why it was a 1 to 3, I think it boiled down to the 1 to 3 usually allowed me to get that initial reaction, which I want to say, if I'm trading in London Open, that London move, that initial London impulse before it, let's say, retraces, I usually grab my 1 to 3. And then if it retraces and breaks even, it is what it is. But then I was kind of playing session volatility and daily volatility. So my average session volatility, 20 pips on an EU, that allowed my 1 to 3, and average daily volatility allowed my 1 to 10. So in a roundabout way, I'd optimize for that. What is your thoughts on that when you are trading retracements specifically? So you're not really going for a whole trend, and you kind of have a destination. If I'm selling, this is the demand area, this is my window to basically be in the sell, to align that with a volatility of an average day, of an average session. Does that play a part?
Yeah, I think from a statistical perspective, if you know that your strategy is most profitable at a certain like profit taking perspective, let's just say 3R in this instance, I'd be out 3R every time. Like, I just wouldn't even hold with a 10 runner. Okay, the 20% is great, but like, and it would feel amazing on the, you know,
on the days that happens,
on the Monday or the Tuesday that it happens every week. But you would just make way more money in the long term just taking that full 100% off at 3R. And also mental capacity. Like, it's just like, as great as I like the markets and I like being involved in them and I like looking at them, I just love just not having to pick up my phone and look at my trade when I'm out doing stuff, living my life. Like, so if I can just be out in the market really quick, make my money, be done, I'm good with it. Do I think that partials make sense sometimes? Yes, I do. Truthfully, they make sense sometimes. You'll swing long Euro USD over a month and you're not taking partials, I'd probably say you're probably doing something wrong.
As a trader, it's very simple. You have to find an edge, and then you have to have a mind so you can follow that edge. But how do you know if you're performing correctly or not? You have to know your data. And TradeZeller is going to show you everything that you need beyond the surface level win rates and performance and equity curve. It's going to show you detailed reports. It's going to be your backtesting tool, strategy testing tool, playbooks, notes, and it's going to be a full journal. It makes your journaling easier, faster, and more meaningful. Whereas if you were just documenting it on an Excel spreadsheet or taking screenshots on your iPhone, you wouldn't be able to pull out the data that you need. The correlations that the AI within TradeZeller is pulling out for you. There's so much variety and utility within the software that I think it's essential for any trader. So the link somewhere below is going to take you directly to the TradeZeller website. I'm not getting paid. This is for you. If you want it, if you like it, go ahead and explore it, and probably you'll be using it for years to come.
I think at your perspective, when you're doing an average 1 to 2, 1 to 3, there's no room for a partial.
No.
The whole point of a partial, I think, is like, I like to think of it as the risk reward of continuing to hold the trade. So if I'm 1 to 5 up, I'm 5% of my account up, and I'm chasing that 1 to 10, let's say, it's a 1 to 2 risk reward to continue to hold. I'm risking potentially 5% to maybe gain another 5. So I kind of look at it like that as well. But in your case, if it's just 1 to 3, that could be a single impulse. What is your average trade duration?
Anywhere from an hour to 3 hours, so like roughly like 210, 215 based on my trade reports.
Meaning to say it's your trading session open impulse.
Oh, always, yeah. I'm at the market 3 a.m. So I'm talking EST times here, right? So I'm at the market 3 a.m., which is London Open, 8 a.m. in London. Okay. So that's when I believe the market opens at 8 a.m., right? Some people can say whatever. 3 to 4 a.m., that's like my hunting, looking for trades. Typically, I could look at 2:30 and go, nah, this is not playing out, I'm done. Like, I'm not even going to look at it. But then 9:15 to 11, that's like in the afternoon, that's like New York Open. Every day I'm at the charts during those times. Like, I will, unless I'm out doing other stuff, like, you know, it's a meme, but getting a tattoo or whatever. And like someone said in my group was like, if he's not busy enough getting a tattoo, I don't know. And so New York. So I'm always looking for trades around New York Open, and the volatility dies at 9 on the Nasdaq. So 11, sorry. The volatility dies at 11. So around 11 o'clock, if my trade hasn't played out, or I'll give it like half an hour to about 11:30, and by 11:30 I'm either out or
11 a.m.
Yeah.
Also, it's only like a 2-3 hour window that you will execute upon.
Yeah.
What is it about the session open that is interesting to you?
It's the liquidity injection into the market.
Now, you've mentioned a few times the word liquidity, so I think that means a lot of things to a lot of people. How are you defining the word liquidity?
Buyers and sellers. There are like I'm also referring to two different things when I say liquidity. Liquidity injection in the market is pre-market orders that are being executed into the market upon the stock market open. So just people buying and selling. So there's just an immediate influx. You know, if we all crammed into this room and opened the door, the way I like to look at it, and then at 9:30 the door opened, we'd all rush out. So I just look at it like all that money will rush out into the stock market. Yeah. All that backlog just rushes out. And then the liquidity from an actual trading perspective, there's liquidity everywhere in the market, right? People will always say it's above highs and lows, which makes sense, but that's where the most liquidity is. But there's just liquidity everywhere, and that liquidity again is just orders resting in the market. The term that people refer to as liquidity is stop lot stops, because that's where the most amount of orders can get filled at a singular point. People are resting stops above old highs, above old lows. So if price trades there, it will most likely take people out of their trade, filling orders in the opposite way. And how many times have you been stopped out and then your price plays out? So it's just like, that makes the most sense. But they're the two. But in reference to what I just said, liquidity in 9:30 is the injection of US dollar value into the market.
Mm-hmm. Now, because you are trading, let's say, liquidity and session volatility, you are, I imagine, waiting for a sweep before you are entering upon a rejection of that sweep. Is the sweep a cornerstone of your strategy?
Yeah. I trade the NASDAQ, but I favor ES volume. So my actual, the creme de la creme setup for me is, they say I'm looking for NQ longs and I'm waiting for NQ sweeps. I would prefer ES to sweep and NQ to not sweep, showing NQ strength. Okay,
so divergence between...
Yes, the divergence. So I would want like a stronger divergence on NQ with ES sweeping, because when ES takes liquidity and the volume kicks in, the volume on ES really picks up way more from a US dollar value than it does on NQ, but the move is quicker and faster on NQ. So if NQ shows strength on that sweep, I would just simply wait for an inversion on that level. And typically, if we are around a -2, -2.5 standard deviation from a previous leg, so say we've sold into London sells and we're resting around -2, -2.5 standard deviation, I would want to see divergence with the ES taking liquidity, NQ showing strength to the upside. And then I would want an inversion in one of those legs, where my validation is, once we trade above the inversion of the imbalance, I get in on the imbalance. My validation is the divergence, and I target local discount.
With regards to the divergence, you're trading the one that is not sweeping.
Correct.
Okay, so you're using the sweep on one.
Well, actually, let me rephrase that. I'm trading NQ. Doesn't really matter what happens. I'm talking like creme de la creme. If NQ takes liquidity and ES doesn't, I would still frame the trade. I would just, in my head, would prefer ES to do it, because ES just carries more dollar volume. So the most traded contracts on CME are the ZB1 bond, and then ES, and then there's a bunch of other commodities. Then there's NASDAQ.
I see.
So
to be honest, I'm doing something similar between EU and GU, using a divergence where one is sweeping, one isn't. I'll take the one that isn't, because I know where to place the stop loss, but the sweep is giving me an indication of intent. Mm-hmm. What is it with the divergence that you are looking for specifically? Or what does it mean to you, let's say?
Divergence for me signifies a reversal over a pullback. So if both take liquidity, typically it's a pullback, and then we can look to trade. And based on statistical data for me, when one gives SMT, and a lot of people will argue against this, that's fine. When one gives SMT, we typically reverse. Like, price will quickly reverse. Mm-hmm. And then at that point, I'm in my trade, I'm out of my trade, I'm done. The rest of the price can go wherever it wants to go. Mm-hmm. And for me, like I said, my model is, I have two things. I have a reversal model and I have a continuation model. They're the same thing. One just trades from one trades reversals from the top to discount. One trades from discount back to the top. And they play out in different ways. But I prefer the continuation model for obvious reasons, because it's harder. I feel it's harder for me to trade continuation models, but they're more profitable because they play out when price starts to reverse. On an overall uptrend, I have more confidence in it. And reversals are, for me, the moment we take hourly lows, I have to go break even, because I'm almost counter trend, right? So I have to be break even, and I have a lot of break even trades.
Is trend important to you, pro trend or counter trend, if in the end you are in and out within a couple hours, the session volatility, but the trend might be a 1 hour trend, 4 hour trend that could be going on for days or weeks?
Yeah, I mean, it is important, right? Like, do I want to be the person that shorts Nasdaq at the top? Sure, but is it suicide? Yes, like because that thing can just run, you know. So, is the trend important? Yeah, 100%. Do I care about it to the point that if I get a short set up at the top, I'll take it? I'll take it because the way I understand, and again, this is not me trying to say like I understand it and no one else does. The way I interpret my understanding of price, for us to continue higher, we have to take lows, significantly for me, hourly lows. And if I'm in a reversal trade and we haven't taken an hourly low, my stop loss is the current high. And if I get stopped, I try to catch the knife, I accept my fate. But if we are going to continue higher, the likelihood of us taking an hourly low is quite high. So if I can go break even at that hourly low, I'm good, because if price then continues, hourly low is swept and we continue higher and I get taken out break even. And in the instance that it's not and we continue lower, I get out of the market at discount or minus 2.5 and I'm good.
You know, if I was to kind of not knowing any traders, just say what is an ideal system, what are ideal KPIs, let's say, I would look at, for example, somebody that's trading with liquidity. Number one reason is because you're trading with the intention. You've got like a volatility coming in, you've got the real moves coming in. So liquidity is a very important one, I believe, and it supersedes market structure, maybe even supersedes trend. I'd also look at the idea of time of day of trading, because you're trading with the volume of the session, volume of the day. I think that's super important. Confirming rejection. So you might have had a price shoot up to sweep, but until you know it's definitely coming down, you need the confirmation of that. So that would be another one. Then I'd also say a high break-even rate, because there's no cost of breaking even. And in fact, you can be very aggressive with your entries upon sweeps. As long as you break even very aggressively, let's say, you're always protected. So you're always kind of having a shot at making your 1 to 3, or 1 to 2, which is, in terms of points, it's not the biggest move. So you're kind of going for reactions as opposed to huge impulses or huge new expansions, let's say. With a reflection of that, what is your view on break-evens? Because a lot of people I've spoken to are just let the trade breathe and let it do its thing. Whereas others I found are very fast break-even. For example, I had a trader who's also had $1 million from Apex. I had him on very recently. He was a big proponent of just break even very quick because there's no cost of breaking even. What's your thoughts there?
100%, yeah. The biggest offense in trading is defense. And if you can go break even and that trade's free from there, I'm good with it. And I think that's also ties into why I think partials are a scam, because I can just go break even and that trade's free for me. And I can just let that trade then breathe. But I'm only break even based on an hourly sweep. Like, I want an hourly 4-hour low. Well, the moment we trade below that, statistically, if we reverse from that low, we continue the overall trend. And in my reversal model, that's fine. And then if we get a continuation model, I would want to see that 4-hour sweep before we continue. So, and the moment that I get into that trade and we break the local high, I'd be break even because I wouldn't want to see price for trade to it. So I'm all about break evens. And like I said, my break even rate, like for the Apex challenge, was like 35%. My live account is closer to like 40%.
Of break even trades?
Yeah, all of my trades, like 40% of them are just break even.
I think that makes a lot of sense, because you're just giving yourself shots and you're protecting yourself. And you know that because you have such a high break-even rate, you're catching winners that maybe you wouldn't have caught if you weren't so aggressive in break-even. I think it unlocks profit in that sense. I want to understand something. So you mentioned how let's frame it for a sell. So you know that the market is overall, it's an asset that's going up, it's an appreciating asset. And then once you sweep a level, let's say a 1 hour level, you're looking for confirmations to then sell. So that's kind of the premise. Now, there's a few things it could sweep high before you look to sell. So it could, for example, sweep an Asia high. It could sweep a previous higher high in a bullish trend, the last higher high. That might be previous day high, let's say. But the reason I want to specifically mention that is because a higher high being swept means the trend is continuing bullish. It's just a temporary retracement. Versus you're sweeping a supply zone, which means now once you've swept that supply zone, price should go on to make a lower low. So there is a difference in outcome of trend, let's say. So I want to kind of hear your thoughts on what you establish as worthwhile as a sweep, regardless of, let's say, time frame, because the bigger the time frame, the more meaningful of a sweep it'll be. But in terms of like Asia versus structure versus previous day high, previous week high, supply zone versus higher high, there's multiple levels that may print the same, but maybe have different meanings.
So for me, I attribute the most weight to Asia high and low, especially during London.
Most weight. Okay.
So the most weight, especially to those two during London, only during London. Absolutely most weight. Previous week high, previous week low, previous day high, previous day low, and then 4 hour highs and lows. Because for me, in a reversal, right, I would always look for a swing point to form, so a 4-hour high to be traded above. So let's just take Pico top of the market, right? If you look on the 4-hour chart, there is always a wick that just takes all liquidity, whether that's in the middle of the range that forms at the top or on the end, whatever, before the big sell-off, right? Typically, one of those 4-hour wicks is always ran. So with all the orders that are built up above a 4-hour high, and again, we're just framing shorts here at the top, right? So sells above a 4-hour high with a stop above that 4-hour high, the probability of taking that 4-hour high to then run lower is high, right? So what I want to do is I want to be positioned in the 4-hour wick with my stop above the higher high. And so typically, once we trade above a certain point, when I'm looking at, let's just say 10 a.m. reversal, if NQ trades above at 10 a.m. trades above 9 a.m. high, what I look for is that to be accumulation, manipulation, and then for us to distribute. Yeah. I want to be positioned in that 4-hour wick. Why? Because if I'm wrong, once we invert an imbalance, if I'm wrong, my invalidation is the high of the 4-hour wick. And if I'm framing it on a 4-hour and how that candle is going to print, that 4-hour wick should just remain untouched. Yeah. Right. So that for me is the most important thing. But if we're above day, and then combined with that, say we're above daily high. So daily high is here and we're trading up here. I'm trading the 4-hour PO3 within a daily PO3. Right? So for me, when we're above highs and lows, I can start to frame, and then I add in some statistical levels from like based previous weighted average of highs and lows based on NASDAQ, of where like historically on Thursdays we go up 200 points or whatever. This is historically the average high of the day. Combined with all of that, I can start to frame shorts at the open, and then frame when I see my model, I can just click the button and be done with it. And then once we start to trade below that hourly low, that wick should be protected for me. So I can just go break even, and the moment I break even, I can just let that run. So that for me is the most important thing. But to answer your question, weekly, it's just by the same premise of support and resistance, right? The higher the time frame, the more important. And for me, old highs and lows are the most important. If I come to if I come to a chart right now, and it's any chart, the first thing I'm going to do is mark out weekly high, weekly low, daily high, daily low, 4-hour high, 4-hour high, Asia high, Asia low. We're at London, and I'm like, where do I want it? Where, for me, market maker theory brain on, where does it make the sense to run the most liquidity here? All of this liquidity is just built up, low resistance liquidity to the top. Great, let's sweep the current 4-hour low, which happens to be Asia low, and then let's just run those sells into buys up to the highs. So for me, I would just immediately eyes on Asia low. If we start to trade towards Asia high, I'd be like, am I missing something? Is there some divergence here? I'm framing buys from Asia low. Okay, we're now trading to Asia high. Now we could just trade the Asia range. We could just trade from high to low, and then we can get this set up later on. So it's almost like inceptionally just as important, but I'm always trying to get into a 4-hour wick, typically the 10 a.m. wick. I
want to echo everything you said.
Yeah.
And, my system is pretty much exactly the same. The trinity that I'm kind of focused on is sweeps. So I call it inducements. It's a variation of sweeps, let's say, but sweeping previous day high or Asia high, or the same things that you've mentioned, but also time of day. The opens of the session is where the volatility kicks in. I think that's important. And then confirming the rejection. So I want to focus on that last piece because there's, for example, if you have a previous day high, and let's say you're having a bullish movement, so you're at a previous day high.
Yep.
You might be saying, okay, this is a sweep and therefore should go bearish. Or you could also say, I've just cleared a higher high. It might just go bullish for a bit, maybe hit a counter supply and then go bearish. Basically, the question here being, what's the difference between a sweep versus a break of structure?
Well, if you can't ever frame a daily sweep until the daily candle prints, right? So if you're trading above a daily high, the only thing it is you're just trading above a daily high until that daily candle prints. So the sucky thing about daily highs is that you have to wait for them you have to wait till the end of the day, right? So the only thing that I do at a daily high is I start to get more bearish and start to frame. If the daily candle was to then finish bearish and this was to be a sweep, this would be really obvious that this was just a daily high sweep within a long-term trend, and this was just a liquidity grab before moving lower. So at that point, I naturally get bearish, and then I look for bullish PD arrays in the leg that took us there to start to get invalidated, to then confirm that we're bearish, giving us our market structure shift.
Okay, so to confirm, you're not trading on the moment of the sweep. You're seeing the sweep happen, you're letting that day close, and then you trade the following day.
No. I'm just saying that the difference between a sweep and a breaking structure is obviously the close, right? So
the follow through, yes.
Yeah. So the follow through. So I'm just saying the daily for me is like, if we trade above on a Friday, Monday, Tuesday could trade above the weekly high, and then on Wednesday, Thursday, Friday, we just trade to the weekly low. When you look at the weekly chart, it's going to print a bearish candle. Mm-hmm. But on Monday and Tuesday, you're like, market's bullish, it's great, it's whatever. Yes. But actually, on Wednesday, it just forms a reversal and then trades below the weekly open, back towards the previous week low. And then everyone's like, yeah, you should have just shorted previous week high and just closed the previous week low, and it's great, it's this, it's that. Okay, but Monday, Tuesday was stupidly bullish, and getting short on Monday and Tuesday was kind of hard because there was no breaking structure, there was no liquidity runs, it just ran. And then on Wednesday we come to London, and this is like typical like week of how I think and frame things. We come to London, we take Asia high at 3 a.m, we take all liquidity, and then we reverse, and then we just start trading below. For me, I then am just framing, okay, I want to see us trade back below the previous week low, because then I can frame weekly PO3, and then I can then drop down to the daily and frame daily PO3, and then that just allows me to position in a 4-hour wick somewhere on it, look, typically around 10 a.m.
So I've had a few traders speak about PO3, but I guess maybe not everyone's familiar. So if you can kind of break down why power of 3 is important for you.
I just always want to be positioned in a wick, and PO3 is like a very fancy term to say the power of 3. I want to be positioned in that wick, so whatever that wick looks like. But there are many terms for it: accumulation, manipulation, distribution. It's just, you want to see a run on liquidity above old highs, a stop in liquidity, stopping price moving higher or lower, and then a distribution to the opposite side. So it's an easy way to like trap traders, fill a lot of liquidity, get shorts or longs out early, and then reverse. It's the most painful scenario for your average retail trader. And that for me is like, you know, I subscribe to market maker theory quite a lot. So I'm like, what causes the most pain here? It's probably the most likely outcome.
Mm-hmm. With regards to when you are seeing a wick, but then obviously within a candle, you have the wick high, wick low, and then open close, therefore the body. When you are trading within the wick high, let's say, and you could potentially sell all the way down to the close of the candle or maybe the wick low, but you're actually just selling a 1 to 2 R, around 1 to 2 R you mentioned.
Yep.
With that being said, you are kind of leaving most of the move unprofited. Have you considered maybe taking a swing approach to it, or maybe partialing towards a swing? I know you don't believe in them, but I'm just curious to know, when you do have that whole potential of the candle, why cut it at just the initial reaction?
I just don't need to be in the market all of the time. That's like, the longer I'm in the market, the more I lose. Okay. Simple as. Like, I accept the market's better than me. I'm not the market. I don't claim to know anything that you don't have the ability to learn. I haven't cracked anything that I'm like, I'm better than everyone. I just know that this works. I can get my piece of the pie and I can just go live my life. And those that want to be in the high and the low of the market, I'm rooting for you, but I just know deep down and along the way, you're taking way more losers than you are the winners. And the winners that you could have taken along the way, that then become losers, they're the trades I catch. The market's better than me. I bow to it. I give everything to it.
You've been humbled by it.
Yeah, I've been humbled by it too much to know that the more I'm in it, the more I lose. And if I can just grab my small piece of the pie and go live my life, I'm really good with that. I'm happy and I'm content.
What is a reasonable profit target, let's say in terms of percentage per month, so that people can kind of have a reference to really take in what you're saying here, or more to say, how often are you taking a trade in an average week or average month?
NQ can give you a setup every day if you force it, like truthfully.
A good setup.
Like most days, yesterday I looked at the market and was like, I wanted short. We got shorts, we didn't get our entry, basically. Like, price didn't have the volume to get there, which was fine. It was a Monday, I wasn't going to chase. But if I wanted to, I could have just traded a breakdown off that like the moment we traded into the breaker, I wanted the inversion. The breaker was just below. I didn't want the breaker because my stop loss was just a little bit too big. Otherwise I would have happily taken it. The group were like, yeah, I might take the breaker, fine. I wanted the inversion. If I wanted to, and it was like a Wednesday or a Thursday, and we had no like high volatility news, or news was earlier, I could have sell stop like the wicks below. So again, I have a bit of a strategy. Like I can sell stop a 3-minute candle wick into a 5-minute candle wick, and I can get short or long for free. It plays out so much. It's hard to explain and just saying it, but there's a correlation. If we start to trade below a 3-minute wick, we trade to a 5-minute wick. So if the 3-minute wick and the 5-minute wick are far enough apart, I can sell stop the 3-minute wick with a tight invalidation. And once we trade below that 3-minute wick, we can flush to the 5-minute wick, and I can get in the trade for free. So I can sell stop. The moment we start trade that 5-minute wick, I'm break even, which is again why I have quite a lot of break even trades. And I can get into a trade that I would have potentially missed, and it's free for me because it's break even so fast.
Yes.
So
very interesting. I want to understand, because you have transitioned towards futures, and a few of the few futures traders that I've spoken to, they're very interested in the order flow and kind of looking at that next level. Are you interested in that, or is it just simply raw price action?
I just don't care about anything other than the candlestick, really. Obviously, I care about news and seasonality of, like, you know, typically NASDAQ goes up in November, December, January, especially in election years. So, like, you have to take some things into consideration. The things that I care about are earnings, because it affects it more than anything. News, like the 3 major news drivers, NFP, CPI, PPI, and obviously FOMC, and the rate. Right now, I'm a little bit worried about the carry trade and the yen interest rates, because that caused NASDAQ to go down like 7% last time when they increased that, and they're hinting they might increase it again. So that could put a bit of a spanner in the works. And if the carry trade does unwind whilst we're at all-time high, I would bet that's going to be a nasty correction. But yeah, typically I don't. They're more macro views, right? Okay. You put me in front of the chart right now, I'm not going to start bringing up order pairing and seeing where orders are resting in the DOM, or opening up bookmap and seeing like all of these large bubbles. Like, price will go where price will go, and I'll react to it when I'll react to it.
Okay, the reason I bring that up is not only people are using it, but it's more, I would imagine it's a very nice edge to have, where let's say I'm seeing a sweep, and I want to confirm this is not a bullish breakout, but it's actually a sweep to go bearish. So what I'm using in Forex, I'm simply trying to understand rejection. So I'm kind of seeing breaks of structure. Yep. I'm seeing large bearish candles to initiate, let's say, momentum or signal to me intent. So that's kind of what I'm left towards, which is price action. Therefore, I'm trading after the rejection. I'm looking for an entry to get in and to trade with it, but I'm always a little bit late. I'm not really late. It's a 5-minute candle, but if I did have the order flow, maybe I'll be able to access the real rejection and read that within. So if that's not your approach, how are you kind of concluding what is a rejection, therefore how to place a stop within a sweep?
I'm not using order flow. This is probably the easiest.
How are you doing it with price action? Is it just breaks of structure? Or?
Yeah, I'm waiting for the inversion. The inversion for me is the first sign of a break in market structure. So, and the inversions are subjective, because obviously you can trade a 1-minute inversion. Is it going to play out? Probably not. Typically, I like a 5 to 15-minute inversion, depending on how price is forming, and probably some. You know, like, I'm looking at it saying, yeah, this should sell down. If this sells down, this is where I want to get short. And at that point, I'll get short because the model just tells me. And I could, you know, like, I imagine, you know, Umar is a big order flow trader. I imagine he could sit here and tell me why order flow is the most important thing in the world. Fine, like, if it makes him a lot of money, and I accept that. I make a lot of money trading the way I trade. I accept that I'm going to be wrong sometimes. I'm not always right. And I don't want to mess with something that works on the hunt of making it perfect, because it's never going to be perfect, and I'm going to get on that treadmill and I'm never going to get off. I accept that it works. It plays out 60-70% of the time, depending on the month, and I'm good with the money it makes me. I don't want to increase that to 80% and be at the market 5 times more, or have 3 more screens with 3 more different things. I could take my laptop with my iPad anywhere, and I can trade NASDAQ and ES, and I can just trade it. I can stream to my Discord. I'm content with that. I don't need to try and complicate it on the hunt of perfection. If I'm wrong, I'm wrong. If I'm right, I'm good.
So you mentioned Umar, and off camera you mentioned to me that you're not a believer, or you don't use risk in terms of percentages.
Yeah.
And he's the same in terms of dollar amounts of risk. What is your approach to risk management? And specifically with the 2 million payout that you've had, was there any scaling up of your risk alongside that? Was there any specific strategies once you had a buffer? What is your in general approach towards risk management?
Okay, so let's break it down. So the Apex accounts, and because I get this question a lot, so I'll just answer it for the masses, right? So the Apex accounts, very early on, whilst I was in the buffer, one-to-one R trade, just get out of the buffer. I don't want to be in the trailing drawdown, the intraday trailing drawdown. I don't want to be in that. That's the zone where everyone loses, right? I've got to get out of that as quick as possible. One-to-one R trades, trailing my stop losses, aggressive as I possibly can. Don't want to be wrong. Need to get out of the buffer. Get only one contract per account, just trading NASDAQ. I get out of the buffer. I simply moved to 2, and then every 25K that I made on the account, I just doubled the contract size, because I have the risk inside the account.
I see.
So I then carry that to my personal account, the same system. There's no intraday trailing drawdown, so I can just trade 20 contracts. I have a relatively large size personal account. I can trade 20 contracts, and when that account gets to above a certain size, I can then increase the contract amount. I will openly, wholeheartedly sit here and say, I reset that account sometimes. Like, as in, I take all the profit out and I reset it back down to 20 contracts, because trading 80 contracts on NASDAQ, like, that's like $400 a tick or something silly, like, without doing the maths on the spot. It's a lot of money, right? So the market moves 100 ticks, it's like, it's a silly amount of money. So I reset it sometimes just to not get carried away. And I know that, again, the warriors will say, you're not scaling correctly, you're not doing this, you're not doing that. I'm good. Like, I made some good money the past 3 months. Like, and we didn't really answer your question earlier about how much risk is a good amount of risk to make in the market. Percentage to make. I would say conservatively, single-digit percentages are good, right? The lower end of single-digit percentages a month, you do that, you're beating everyone in the market on an average basis. If you consistently do that over 12 months, you're making, let's say you make 3-4% a month, and you make that for 12 months of the year, you're making 30%. You're beating not only the S&P, you're beating average large hedge funds. Is that enough for me? I don't know. Truthfully, like, on an intraday basis, I don't know. I'm more risk on in the market but I have a higher appetite for risk. Why? I have 10 years of, working my ass off in a PAYE job where I worked for someone else for a large period of time, where I didn't take the risk. I had a lot of money. I then traded, made a bunch of money, lost a bunch of money. I accept that money will come and go. I can be more risking on the markets, knowing when it's in my favor. And those are the days where I make a lot of money. Mm-hmm. I can be more risk off in the market, like I am now. Price is all time high, and I can be more, and my losers are a lot smaller, right? But
in general, though, your risk, you're doing it in a fixed dollar amount. But if you were to convert it to a reference to the account size, is it like around a 1% risk per trade? Or?
No, it's probably more. It's more.
Okay.
Yeah. So if let's just say I have like a 100K account, I will trade with like a 5K stop.
Oh, okay. I would say aggressive.
Yeah, it's aggressive. Okay. Yeah. But I'm intraday scalping, like, so it's aggressive. But, and people can sit here and say that flip accounts or whatever, and I've never redeposited to that account ever. Like, in the year and a half, coming up year and a half that I've had that account, I've never redeposited into it. I've only taken withdrawals, and I'm aggressive at the start, and I build like almost like a buffer, and I treat it like a prop firm account, right? The start, I'm really aggressive. I build that buffer, and then I take the foot off the gas, and I start to just grow the account naturally. Is
your focus now on personal capital, or
yeah,
are you 100%. Still kind of heavily leveraging the props?
No, I don't actually have a prop firm account right now.
How come?
I don't want to say I'm banned from most of them, but like Apex, I can't trade.
Is that an agreement after the payout?
We haven't really discussed it. So the email that they sent me originally was, we're going to freeze your accounts. We want you to take the money. That's the synopsis of the email, right?
Okay.
We're going to freeze the accounts. We want you to take the money. Okay, fine. So took the money. I then need to log in to get certain information off those accounts. I can't. Account has been unfrozen. I email them. You should be able to log in fine. It's not a problem.
It's just a cat and mouse.
It's just a cat and mouse game, right? So we're just playing it. So I'm just accepting that it's not. I don't trade with Top Step out of principle because I just think that, and I'm not going to call them out, but they're like currently on this mission of like being the savior grace of the industry. Yet they're just like every other prop firm. They're just being forced to change the rules by the CME. And I don't really like that behavior. They're like letting everybody gamble on their terms. The sim casino is over, but they promoted it for 6 months. Mm-hmm. And now they're the saving grace by stopping it. And I just can't put, I don't want to put money, and I also don't want to promote a firm like that. I'll just let them do their thing. Sure, people can argue and say, why don't you take them to the cleaners for it? Fine, whatever. I just can't be asked. Okay. My fund of futures, I had a live account, but we closed it. So yeah.
Have you found any particular transition challenges from going from prop back to personal capital?
No, not really.
Okay. Would you say there's an advantage? I know this is like the typical trader's dream of like, let's leverage props into like and get the payouts and put into a live account. And obviously most people don't even reach that point, but those that maybe do reach that inflection point is the fact that, well, it's cheap money or free money with the props. It's a game. You can gamify it. You can just do the risk reward of your evaluations to payouts, and you can really just literally, as you said, casino and gamify the whole situation.
It's like, listen, I did the Apex journey, documented the entire thing on Twitter. It was a game. It was a game, right? Like I had the entire thing planned out from start to finish. Fine, we made more money than I probably anticipated, but it was base hits every day consistently. Just take them for the 60K every 10 trading days that they would offer. Get to the end, take the lot, screw it, be done with it. So, and you can do that, right? Like again, to leverage Top Step stuff. Top Step have this rule that you can only take half your profits for the first 30 days, right? That sounds great. So for the first 30 trading days, you can only take half your profits in the account.
Oh, I see.
Right? So you get paid 50%. Say you make 10 grand, you're going to get paid 5
because they're anticipating you're going to blow the rest after that 30 days.
Do you think if you or I trade that account for 30 days, we get to 30 days, if we make money every single day? No.
Not.
So basically, it's just a glorified way of them saying, we're only going to pay you 50% of the money you make. Yep. And if you do make money, by day 12, we'll move you to live. And that's just a stop loss on how much money they lose, right?
Yep.
So in my head, what's the thing that, for me to get the most money out of them in sim, what do I want to do? I want to just fucking go as hard as I can in the first 3-4 days and make as much money, right? Mm-hmm. That was their like downfall, because I literally said this on Twitter. They now capped payouts to 5K.
Okay.
Right? So it's a game, right? So in my head, I like, and this is the thing, is like, how can I abuse that game as much as possible? With Apex, consistently, they had the rules in place, they had the payout caps. The only way I can play the game is by getting the base hit every day, applying the rules, being done whatever. By the same logic with Top Step, I need to make as much money in that sim environment as possible, because if not, I'm going to move to live. And if I move to live, I can just take that money and put it in my live account. Yep. Me being with them is no advantage to me. You know, like, okay, they can sit here and say they're covering this, they're not. They've got an affiliate deal with a broker that they put, instead of putting 20K in your pocket, they put it into the broker account, and then you owe them 10% of that money. And for them to make money back on that, then you've got to run that up 20 times the amount that you put in so that they can get the money out. Yeah. So it's like, for me, the sim game is a game. And that's, maybe people are going to absolutely hate that. I don't care.
I think it's also a dose of realism, though, because in the end, first of all, there's a massive misaligned incentive where they are hating the fact that people are making money. They see it as a liability. So they're going to put tricks in place, whether it's a trailing drawdown or slippage. There's a lot of moving parts that they can do to make traders trip up. So therefore, I would say the trader's responsibility is to fight that and make as much as they can within the rules that you're given, because it's not just a fair game. Yep. Maybe it's not the most proper from like a trading purist, let's say, but that's where your personal account comes in, where you don't have that reset button, you have to climb out a drawdown if you have it. So I think there is two sides to it. what I'm interested in here is when you've spent a lot of time and made a lot of money with sim environments and gamifying it, when you do go back to personal capital, is there a lot of unwiring of those habits and those thoughts?
Yeah, you have to be able to differentiate the two.
Yeah.
Like, I can't just go on my live account and start, you know, playing it like a game. Yeah, like I can't do that. Like, it has to be clear cut, following my model, following my rules. And if I don't follow my model or rules, and hey, actually, why am I even in this trade? I owe it to my money, more importantly, not just to me, to just get out of that trade. Even if it's a loss, like, just get out of it, close it, be done with it, wait for the setups. Like, if you got into it on the basis that you thought I saw something, I've had it before where I'm like, oh, that's a 5-minute inversion or whatever, and I'm going to get in, and I'm like, wait, why did I even draw that? That's wick to wick. There's no inversion there. Okay. I've just got in for no reason. Like, and then I see that and I'm like, okay, I'm in, drawdown, close. And then guess what? That trade went on to win, but it's a bad trade. Mm-hmm. So if I stay in that trade on the basis that it might play out, I'm just as bad as the people that I think that take partials just to cope with their bad winners, right? Truthfully, that's just me just being as bad. But if I stay in that trade and it plays out, I reward the part of my brain that says it's okay to take those trades, and it's not.
It's a dangerous positive feedback loop because you're rewarded for bad behavior, and that in the short term can just say, oh, maybe I should do that again.
Yeah.
Because last time I paid out, it was a definition of confirmational bias. I want to talk about the payout. So I think a lot of people, when they see life-changing money, which it's different for everyone, but
sure,
even when somebody has, let's say, 20K on a pending payout or 50K on a pending payout, that is significant money that people are going to get nervous on and maybe say, let's stop the accounts. What kept you going on that payout to keep going past 50, 100, 200, 500K? Like, why didn't you stop? Or what was the plan there?
I think because of the Apex thing, it's like you need 3 months of payouts, like, so that you could have 2 payouts in a month, right? One on the 1st of the month, one on the 15th. So 2 payouts every month. And you need a total of 6 payouts to withdraw, to have access to, like, the uncapped period.
Okay.
So for me, 60K every 10 trading days, because again, there's a 3K cap per account, 20 accounts, 60K. For me, 60K every 10 trading days, 120K a month is great.
Solid, yeah.
Solid, like annual salary for a good person every month. Absolutely amazing. 3 months in, 360K. That account's sitting at $2 million now, plus the 360K I pulled out. That was always my goal. My goal was to always do the compounding, pay the trader along the way, because if I didn't, I'm just going to lose the money. I'm not going to get paid the money, and I need to hit those payout milestones. Hit those payout milestones. Get to the end, take the lot, close the accounts, be done with it, or just YOLO them into the abyss. If they plays out, great. If not, move it all into my live account. Not all, but decent chunk into my life.
And the main payout, the $1 million plus payout, across how many trades was that?
72 trading days.
And how many positions within those 72 days?
Every day.
It was a grind. It wasn't like one home run thing.
It was a game. It was a game. Like, I knew that I had to turn up to the market every day and grab a piece of the market that made sense every day. Like, and sure, there were days where I had minus 5K an account, and that's, minus 100K or whatever. But then guess what? The next day I make 12K account. It was just, I had to make a certain amount, a certain day to be within my consistency rule. And at the end, the plan was just to take it all. They approached me before the end.
What did they say?
You're approaching I can't remember the exact email, but it was like a week away from the uncapped period. And they're like, at market close today, your accounts will be frozen. One of the management team will reach out to you to discuss payout options. Thanks for trading with Apex. We appreciate you, blah, blah, blah.
Okay.
But it was like payout options or moving to live. But yes. I knew deep down they didn't have a live environment. So I just knew that I'm getting paid out. It's time.
And talk to me about the day where, because there was probably a period of pending before the payout clears, and like many, mostly yourself, you're probably sitting there thinking, am I going to get paid? And I think leveraging social media was a smart thing to do, because you back them into a corner of they pay or they lose their reputation. What was that day like where the payout hit? Yeah,
so let's talk about social media a bit first. So part of the plan, right? Every day, daily P&Ls, win or lose, share it, and actually it got a bit much, so I moved it to weekly P&Ls. So it was just like here is the weekly P&Ls from their website, the amount of trading days, and those just did numbers, right? People would just see them and like, retweet, comment, they might pay, they might not, like, but all eyes on it was just perfect, right? No one at any point from Apex ever reached out to me up until the freeze email. I never spoke to a single person at Apex. I've never spoke to anyone on Apex on the phone. No one's ever used my affiliate code. Just want to get all that out there. Like, I have no deal with Apex. The only money they've ever paid me is from my trading profits from those 20 accounts that I had. That's it. After the email and I sent the bank details, how did it feel? I mean, it was a period of like a week period where I kind of sent the bank details. They went from being John there, their MD, was quite responsive. Like, I'm going to handle this payout. Okay. Send me your bank details. We need this information, blah, blah. Wire send. Like, there was just like a gap between, like, I'd send the bank details. I then chased like 3 days later, like, haven't heard a response. You were really, really snappy before. Like, what's going on? Boom, wire sent. Wake up the next day, obviously time difference, they're based in the US. Wake up the next day, just chilling, working away. Boom, get a text message. I'm like, that's weird. I've never seen this number before. Open it up and it's like, your account has been credited with, and it's just a phone number. It's just like a...
Yeah, because it's 7 digits of the $1 million plus, and then...
It's just a long number, like no comma,
then
nothing.
Decimal, and then the pennies, the cents. So that's 9.
So it's just like, I'm just sitting there looking at it like, it's a phone number. I'm like, that's not a phone number. That's
a missed call.
That's a debit. That's your account has been debited.
That's insane.
Or credited, sorry, with this amount. And I'm like, wow, let me get my phone out. Like, fuck, that's a lot of money. Like, that's a lot of money to see in a bank account that had open up a brand new bank account for it. It's had no money in it. So, how did it feel in the moment though? Like I said to you before and after, like, I've had periods where I've had money, more money than that, less money than that. I've done silly things with it. I've done not silly things with it. I think that the year I had leading up to it, or the 2 years I had leading up to it, just made me realize that the money will come and go, right? Irrespective of how much it is. I just enjoy it however I want to see fit. But the things that really matter to you are people in your life, and like your family, your friends, your loved ones, and just being surrounded by good people. I trade no matter amount of money that I have in life, I trade it all for good people in my life. I have good people in my life, so luckily I don't have to. But I know for a fact my life would be miserable without my friends and family, regardless of how much money I have. So it's nice to have the money and not have to worry. And, $2 million is a lot of money. To anyone's standard, I give you $2 million, I give anyone $2 million, regardless if you're a millionaire, billionaire, you're going to think, fuck, I can do a lot of money with this money, and it was free. It wasn't free. I worked for it. I did the work, and the $2 million doesn't represent the 72 days of work. It represents the 8 years that I busted my balls and I worked the 12-hour days at my legacy job. Then come home and did my shit in the market, right? Yeah. And my shift, and all the educating that I'd learned, and all that stuff, all the trials and tribulations. That payout made it all worthwhile. And when you spread it out over the last 2 years, it's a decent annual salary. Yeah. You spread it out over 70 days, it's a home run, and everyone thinks I got lucky. But like, no one was there with me in the pits of hell on, December 2022 when FTX had just rugged me for, at the time, $1 million, which was before the big crash, several $1 million. No one was there with me when I got the phone call after being told I have no money, when my brother got hit off a motorbike and was officially dead at the scene and was resuscitated. Like, everyone would swap places with me now because I have the title of the most profitable prop firm trader and all of this stuff, and I've built a nice life and I have a really good life. But no one would swap places with me at that in the depths.
Everybody wants what you have, but no one wants to go through what you did to get it. And I think that's a powerful statement. And I also think it's an important reflection that right now, when you've had the success, the monetary success, that's where everybody wants to be your friend. That's where all the social media fame comes. That's where everything floods towards you. But no one was rooting for you in the journey that made today happen. Let's say
there were some people. I'm not gonna sit here.
Not my point, but exactly. Like, of course, there's always the loved ones around you, but there's not the social media notoriety. There's probably not old friends hitting you up from school, like, "Hey man, how's this trading thing going?" Like, all of that pours later when you're already at the top of a mountain. but not in the come up. And the people that are in their come up need that support more than probably you here now with a few million in the bank from a single payout. With that being said, with a large amount of money coming in a single transfer, all the social media attention, let's say, personal, like let's say pride of I did it after almost a decade of grind, there's a lot of emotions there, and naturally I want to say an ego can come out of it, because you might feel a sense of I'm the man, I'm invincible. I don't know, I want to kind of hear your headspace and behaviors after that payouts, because people have big payouts, maybe I don't want to say this big, but even let's say someone's had a 10k payout, but then they go on a losing spree and kind of give it all back. What was your behavior after that wire hit?
I'm you know, I've said it in the past, and it's something that everyone likes to attack me on, but I have an ego, right? And I've spent the last year really getting control over that. I don't, you know, I want to say killing my ego off, but ego is necessary in life for humility reasons as well.
I think can you define it for me? Like, for example, ego is like self-worth, self-preservation, self-confidence, but then it's also like arrogance, superiority, and narcissism. That can all be in that ego word.
The bad part, you know, the bad parts of my ego is what I'm referencing here. Narcissism, you know, in my early 20s, I was a full-blown narcissist. I take no shame in admitting that. Did the work, kind of got through it. I have a normal amount of desire to be right, and when you are, and that's just in my personal life, but when you are a trader and you have an obsession to be right, that's just like a recipe for success, for failure, right?
Because the market is right.
It's right,
not the trader.
So I've been humbled enough, right, to know that I can sit here and think that I'm the man. I thought I was the man when I had a bunch of money on FTX from nothing. I got humbled quick, and a lot of people did in that process. You know, I wasn't the only fool that had a lot of money on FTX. A lot of very successful traders had a lot of money there.
I wouldn't even say it's a fool, because they were sponsoring pretty much everything.
Like but at the end of the day, you know, I preached so many times, not your keys, not your crypto, and then I got caught up in everything all at once, boom, all on FTX, because I was, you know, moving stuff there to start buying these local bottoms on FTX, all that stuff. So, you know, not your keys, not your crypto. I made a lot of mistakes. My ego kept me in check in a lot of them, but it also caused me to make a lot of mistakes. I would say the work that I'd done the year prior, also I'd done a lot of work on my ego. I went through a personal breakup, and I'd done a lot of work, done a lot of therapy on myself and understanding my flaws so that I could correct them in my future relationships. And the biggest thing that I took away from that was my need to be right, and my ego gets in front of me sometimes. That actually has a detrimental effect on other parts of my life.
Personal relationships.
Yeah, in my personal relationships. So like, I would have the need to be right in my personal relationship, but actually, when you break it down, I come out of the situation, I reflect. I don't care about the outcome there. I just care about being right. Like, and that's just a very bad trait to have. So, combined with the work that I'd done previously, I get a nice big payout that hits the bank. I could walk around, I could go and buy the supercars, and suddenly I'm the man of the town and do all this. And, you know, I already have a nice car. I'm quite content. Like, I could go and buy a nicer car. I can go and buy, you know, a brand new Revelto, like whatever. I don't fit in it, but I could buy it, you know, whatever. But am I going to think I'm the man? Sure, probably for a couple of weeks, months, maybe a year. But for me, combined with all of that, and the ego, the work I'd done on the ego, and the newfound like 2-year period where like family and friends are really important to me, I'd rather just use that money to work and do all of the things where I can just make a bigger change in my life and just not be the man. Because truthfully, bro, I don't really care what anyone thinks of me anymore. Like, again, we were talking off camera before about, you know, people will come into my group or my streams and say, I think you're wrong. I think I just don't care what you think. Like, and that's not an ego thing. That's just I'm really content in, I'm happy what I think about myself. I know I am who I say I am. And as long as I am, if you hate me for it, then fine. Like, you know, that brings me sadness that you think that I'm an awful person and you have this conception of me or whatever, or you think the payout's fake, whatever, cool. You come and ask me nicely, I'll, you know, in a nicer way, I'll help you figure out who I really am, or you want to spend time with me, I'll do it. But the payout could have quickly become the worst thing of my life if I let it.
If you allowed it to.
Yeah. So keeping that in check was important.
I think that's a very important message to put out there. I'm also curious, however, where you've kind of touched on, let's say, interpersonal side of things and how your younger mind was affected by maybe the life you were living. I'm also curious to say, what is the transitions, if any, that when you are a trader, you have to be very stoic, maybe even cold. You have to be a certain caliber with your emotions, and you have to deal with them in a way that's pretty unnatural. How you deal with loss, how you deal with adversity, how you deal with greed, all of these things, what you desire. Mechanisms in our mind are, I want to say, morphed by going through trading for an extended period of time. Do you find that had any ripple effects in your outside life, outside of the markets, where maybe you're very cold and stoic in the markets, which is a great thing, but maybe therefore a bit distant from your emotions outside the markets?
Yeah, in some way, yeah. I mean, I can quickly let people go. Like friendships, family, loved ones. Like, I not only believe in my worth, like as a person, like what I bring to the table in my life, but I can just quickly realize that if I'm not going to beg or plead or try and prove my worth to anybody, if you can't see it, I'll let you go. And for me, that's the same thing as my model's playing out great. Trade. And if it's not, great. Yeah. I can just accept it. But I can accept a bad outcome is a bad outcome, but it doesn't mean that it's forever a bad outcome, right? And again, I'm not religious, but I truly believe in like the universe, and I'm exactly where I'm supposed to be. And the people that are meant to be in my life will be in my life, and the people that aren't, they will find a way to leave. So I take like great, like, I guess to use your term, like stoicism in what will happen, and I can't control it. And I take that approach in the market. I can control the model, and I have a reason for getting involved in the market, and I have a reason for getting out, both good and bad. What happens in the middle? It's out of my control. Yep. I just have a reason to get in, get out. This is my break-even criteria. Great. The rest is out of my control. Yep. And, you know, people can sit here and say that's crap. I was quite literally up 70K on a live stream the other day. My chat were going mad. I was just sat on my phone, just, you know, responding to text messages like, how's this guy just so calm on being in this trade for this period of time? And I called the entire thing on Twitter. Swing short NQ, you know, and I'm just up 70K. At one point it was up 100K. I trailed my stop loss to an area. We hit my stop loss. I made 70K. Okay, I could have made 30K more, but I made 70K in one day. I could be euphoric about the 100. I could be euphoric about the 70. Okay, but if I lose 40 the next day, am I going to be really depressed about it? No. And that's the stoicism for me, and that's where I apply it it does affect my personal
perspective,
life.
It sounds like.
Yeah.
I want to end up with final advice. You've had a very vibrant journey with highs and lows, with you know, turmoil in your personal life, but also with being set back with the FTX situation, losing money. Like, you've had the full trader's experience, I want to say.
Yep.
So therefore, you are in a unique position with the money that you've made and the experiences that you've had to give probably the best advice to traders that are coming up. What would that look like?
If you're young, take risks. Because in my early 20s, I didn't take enough risks. And even if you're in your late teens, right, if you can afford to take risks, get a job, you know, spend the money, live life. To trading specifically, it's a long-term game. If you're in it for short-term success, you won't stick around throughout. You just won't stick around because you'll have some beginner luck maybe, and when the beginner luck turns to, oh, okay, let me get a bit more into this, and suddenly you start to make it a bit more complicated, you'll go on the losing path. And I say the losing path, but it's the fee to pay to learn, right? You have to learn, you have to pay, you have to have some attachment to the industry. Because if you do it in demo and you're like, yeah, I'm the best, the moment you add some money into it, you've then got the whole emotional aspect of it and getting that on. So, that for me is take risks, appreciate that this thing is, you know, I've been doing this 8 years now. You know, some people even that I know have been doing it longer than me, right? It takes around 4 to 5 years, 3 to 5 years, I guess, to reach that profitability mark. But then once you hit that profitability mark, you go on a completely different journey about scaling, mental, being able to completely, you know, always dumb down your emotions over a period of time. And that gets draining, right? Be hyper-focused, but appreciate hyper-focus comes with hyper-burnout. you want to sit there and back test for 3 months straight or trade for 3 months straight, just appreciate that when you have 2 months of time where you just feel like you can't think about anything and you're just tired and you're this, appreciate that you hyper burn out. I can hyper focus on something for a short period of time, but after 3 months I'm burnt out for 2 weeks and I have to reset, come to Dubai, chill in the sun, live life a little bit. And trading's hard, man. Trading's really, really hard. If it was easy, everyone would do it, and statistically no one does it, and the people that do it, only like 1% of them make it. Yep. So just appreciate that the likelihood of you being in the statistic that doesn't make it is stacked against you. And if you can't come into the industry knowing that you've got to outwork everyone in a understanding the market perspective, combating your emotions, scaling your capital, the odds are just so stacked against you. So if I was to sit here and say to a new trader that's like starting out in the industry, expect it not to play out. But if it does, it'll be the best thing you ever do, because it will change your life. It's changed my life for the better, right? And the market's tough. It will humble you. It's always correct. Put in the work, take the risk. And if and when it does play out to any degree, appreciate it, pat yourself on the back, reevaluate. Do I scale? Do I quit while I'm ahead? Because quitting whilst you're ahead is probably the best bet.
No. Kane, a wonderful message at the end and a beautiful podcast. Thank you for joining.
Thank you, mate. Thanks to everyone for listening. Appreciate it.
Boom. There we go, bro. Sheesh.